Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2024, and we're diving into Incyte's third quarter earnings report for 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Incyte has reported some impressive numbers this quarter, and I'm excited to break them down with you.
Great. Let's get started with an overview of Incyte's performance this quarter. Revenue and profitability overview. Let's start with the top line. Incyte reported total revenues of $1.138 billion for the third quarter of 2024, marking a 24% year-over-year increase. John, what are the key drivers behind this growth?
Absolutely. The revenue growth was primarily driven by strong performances from their key products, Jakafi and Opzelura. Jakafi's net product revenues reached $741 million, up 16% year-over-year, while Opzelura saw a remarkable 52% increase, bringing in $139 million. This growth is largely due to increased patient demand and successful market expansion, particularly in Europe.
And how does this translate to profitability?
In terms of profitability, Incyte reported a net income of $106.5 million for the quarter, with an earnings per share of 55 cents. While this is a solid performance, it's worth noting that their operating income saw a decrease due to significant R&D investments and milestone payments.
Product performance and market expansion. John, let's delve deeper into the product performance. Jakafi and Opzelura have been standout performers. Can you elaborate on their market dynamics?
Certainly. Jakafi continues to be a cornerstone for Incyte, with its revenue growth driven by increased demand across all indications. Meanwhile, Opzelura is gaining traction, especially with its recent expansion in Europe. The product's approval for vitiligo and atopic dermatitis in Canada further strengthens its market position.
And what about Niktimvo's recent FDA approval?
Niktimvo's approval for chronic graft-versus-host disease is a significant milestone. It's the first anti-CSF1R antibody approved for this condition, addressing a critical unmet need. This approval not only diversifies Incyte's portfolio, but also opens up new revenue streams.
Research and development initiatives. Incyte has been heavily investing in R&D. They reported R&D expenses of $573 million this quarter. What are the key initiatives driving these investments?
Incyte is focusing on expanding its clinical pipeline. They've filed a supplemental new drug application for ruxolitinib cream in pediatric atopic dermatitis, with approval expected in 2025. Additionally, their Phase 3 trial for retifanlimab in squamous cell anal carcinoma met its primary endpoint, which is promising for future approvals.
And how about tafasitamab?
The Phase 3 trial for tafasitamab in follicular lymphoma showed positive results, meeting its primary endpoint of progression-free survival. This positions tafasitamab as a potential key player in the hematology-oncology space.
Financial guidance and strategic outlook. Looking ahead, Incyte has raised its full-year guidance for Jakafi. What does this indicate about their strategic outlook?
Raising the Jakafi guidance to a range of $2.74 billion to $2.77 billion reflects confidence in sustained demand and market penetration. This, coupled with their robust pipeline, suggests a strong growth trajectory.
And what about their financial health?
Incyte maintains a solid cash position of $1.8 billion, despite significant investments and a $2 billion share repurchase. This financial flexibility supports their ongoing R&D initiatives and potential strategic acquisitions.
Key takeaways. To wrap up, Incyte has delivered a strong quarter with impressive revenue growth and strategic advancements. Their raised guidance for Jakafi and the FDA approval of Niktimvo highlight their robust market position and innovative pipeline. John, any final thoughts on Incyte's investment prospects?
Incyte's focus on expanding its product portfolio and strategic market expansions make it a compelling investment opportunity. Their commitment to R&D and strong financial health position them well for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Incyte's performance in the comments below.